What they're not telling you about inflation: you've probably heard people say the dollar is dying. Maybe you've seen headlines or tweets claiming your money will be worthless soon. But is that actually true? Is your hard-earned cash secretly losing value while you're watching this video? Today, we're cutting through the noise. I'm going to explain how inflation really works, why people are so worried about the dollar, and most importantly, how this affects you and your wallet. So stay with me, because this is information they don't teach in school, but absolutely should. Let's start simple. Inflation is when prices go up and your money buys you less than it used to. It's basically a slow leak in the value of your cash. Over time, things get more expensive, not because they're worth more, but because your dollar is worth less. Here's an easy example. Back in the 1960s, you could buy a McDonald's hamburger for 15 cents. Today, that same burger costs over $5. That's inflation. The burger didn't magically get more valuable, your money just doesn't stretch as far. Now, what actually causes inflation? A few things. First, when the government prints more money, especially when it's not backed by real economic growth, it increases the supply of dollars chasing the same amount of goods. More dollars, same stuff, equals higher prices. Second, supply and demand imbalances. If demand for products surges but supply can't keep up, like we saw during the pandemic, prices rise. Add to that global supply chain issues and energy costs going through the roof, and you get even more inflation pressure. In theory, central banks try to keep inflation around 2% per year. But in the last few years, we've blown way past that. You've seen it yourself, at the grocery store, the gas pump, rent prices, it's unavoidable. So, does this mean the dollar is dying? Well, not exactly. Here's what people get wrong. The US dollar is still the world's reserve currency. That means most global trade happens in dollars. Oil, gold, international debt, it's all priced in dollars. That gives the dollar a massive advantage. But here's the nuance. The dollar doesn't have to die dramatically like Zimbabwe or Venezuela's currencies to hurt you. It can simply lose purchasing power slowly but surely over time. In fact, that's already happening. If you look at a chart of the dollar's purchasing power from 1913 to today, it's shocking. The dollar has lost over 90% of its value in that time. Some countries and alliances like BRICS are trying to challenge the dollar's dominance, pushing for alternatives. But so far, no other currency has the trust, liquidity, or global infrastructure the dollar has. So, no, the dollar isn't going to collapse overnight. But its value erosion is very real. Now, let's bring this back to you. How does inflation affect your daily life? First, it hits your essential expenses. Food, gas, housing, these have all seen significant price jumps. When prices rise but your paycheck stays the same, your buying power decreases. You're effectively earning less in real terms, even if your salary number doesn't change. There's also something called shrinkflation. That's when companies keep the price of a product the same but reduce its size or quantity. Ever noticed how a bag of chips feels half empty now? Same price, less product. That's hidden inflation. Savings accounts also get hit. If your bank is giving you a measly 1 or 2% interest, but inflation is running at 5 or 6%, you're actually losing money in terms of purchasing power. It's a silent thief. Wages often lag behind inflation, so even if you get a raise, it might not keep up with rising costs. And while CPI, the Consumer Price Index, is the official measure of inflation, critics argue it doesn't fully capture the real impact on everyday expenses. Now for the big question: how can you protect yourself? First, diversify your income. Don't rely on a single paycheck. Consider side hustles, freelancing, or building passive income streams. The more income sources you have, the better you can hedge against rising costs. Next, invest in assets that historically outpace inflation. Stocks, real estate, commodities like gold, and even treasury inflation-protected securities, or TIPS, are designed to maintain purchasing power. Some people also look to Bitcoin and other cryptocurrencies as potential hedges, though that comes with higher risk. But beyond investing, the best defense is financial literacy. Understanding how money works puts you ahead of most people. Inflation is inevitable, but being broke because of it is not. Build your skills, increase your earning power, and make your money work for you. At the end of the day, the dollar isn't dead, but it is constantly losing value. Inflation is the silent tax that affects every single one of us, whether we notice it or not. Now that you understand how it works, you can start making smarter financial moves to protect yourself. If you found this video helpful, hit that like button so more people can see it. Subscribe for more straight-up finance content without the hype. And tell me in the comments, do you think the dollar will collapse in our lifetime? I'm curious what you think. And stay tuned. Next, we'll dive into how the Federal Reserve uses interest rates to control inflation, and what that means for your wallet. You won't want to miss it.